Ladies and gentlemen, good day and welcome to the Prestige Estates Q4 FY-25 earnings conference call hosted by Axis Capital Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pritesh Sheth from Axis Capital Limited. Thank you, and over to you, sir.
Thank you, Rutuja. Good afternoon, everyone. Apologies for the delay, but welcome to the call. We have with us the management of Prestige Estates, represented by Mr. Irfan Razak, Chairman and Managing Director, Mr. Zaid Noman, Executive Director, and Mr. Amit Mor, the Chief Financial Officer. I'll now hand over the call to the management for their initial comments. Thank you, and over to you, sir.
Good afternoon, everyone. Like said, Amit and Zaid and Mr. Nayak are with me. So I'd like Zaid to do the opening call and opening comments, and then we'll take question and answers. Zaid?
Thank you, sir. A very good afternoon, everybody, and thank you for joining us today. FY25 was a year that tested us, but it reaffirmed the strength in our fundamentals. While we faced a few external headwinds, particularly around approval, we are pleased to share that we closed the year with a strong fourth quarter, delivering a meaningful recovery across several metrics. In Q4, we recorded new sales of 6,957 crores, which is a 48% year-on-year growth on the back of a robust launch pipeline and solid customer response, especially to our premium offerings. We sold 4.49 million square feet across 2,301 units during the quarter. It's also worth highlighting that in this quarter, our sales in Mumbai overtook Bangalore, a significant milestone that underlines the success of our geographic diversification strategy and the growing contribution of non-South markets to our top line. For the full year, we clocked 17,023 crores of sales. This is 19% lower than last year, largely due to the deferred launches. However, this was offset by strong pricing power. Average realization for residential apartments, villas, and commercial products rose 36% year-on-year to 14,113 rupees per square foot, while plotted development saw a 50% year-on-year increase. Our performance was underpinned by a balanced geographic mix. Bangalore contributed 45%, Mumbai 30%, Hyderabad 23%, and other cities made up the rest. There's a clear shift, as you can see, from our earlier years and reflects our successful expansion across our home market. Collections remained steady at 12,084 crores for the year, up slightly from FY24, and launch momentum picked up sharply in Q4 with 14 million square feet launched across 4 cities. For FY25, total launches stood at 25.63 million square feet with a GDV of 26,223 crores. Our non-residential segments continued to perform well. Gross leasing in our office portfolio was 4.1 million square feet, with occupancy holding firmly above 90%. In retail, we saw 2,264 gross turnover across our malls, with a strong 99% occupancy and 18 million footfalls. From a financial perspective, we reported revenues of 7,735 crores for this financial year, impacted by slightly lower handovers during the year. EBITDA stood at nearly 3,000 crores, while profit after tax was 617 crores. Our EBITDA and PAT margins remain healthy at 38 and 8% respectively, reflecting robust operational efficiencies. Looking ahead, we are entering FY26 with renewed momentum. Q1 has already seen a strong start with the launch of the Prestige City Indirapuram, a marquee township development in NCR with a GDV of 9,000 crores, of which we have already sold over 6,500 crores. We also marked our maiden inaugurations in Mumbai with handovers at Prestige Jasdan Classic, Fiesta at the Prestige City Mulund, and Prestige Surf Tower at Mahalakshmi, backed by a robust pipeline of projects with an overall GDV potential of approximately 42,000 crores across geographies such as Bangalore, Mumbai, Hyderabad, Chennai, Goa, and NCR. We are pleased to say that we are well positioned to scale to new heights in the coming year. I thank you for being patient, and I look forward to addressing your questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Parikshit Kandapal from HDFC Securities. Please go.
Yeah, hi, Mr. Razak. Congratulations on a decent quarter. So my first question is, what is the guidance of previous guidance for FY26 now?
You came straight to the target. Now what has happened is we had kept a target of 24,000 crores for fiscal 25, which of course we fell short of, and this thing. But I think this first quarter itself will give us some 12 to 13 crores. So I believe that we should cross 25, maybe 27,000 crores should be the, if not more. But I think let's take 27,000 and go along for the year.
Do you think first quarter we do almost 12 to 13,000 crores?
Yes, please.
Oh, wow. So now the second question comes as the velocity is so high, and we only have this in the slide. I can only see 42,000 crores of gross development value left to be launched. So how are you thinking about new business development, and how do you see this pipeline growing? What is the business development done in FY25, and what is your target for FY26?
Thanks, Parikshit. Yes, we have moderated our GDV pipeline, the slide that you saw, to 42,000 crores. But this is not only what we are going to launch. This is something with absolute certainty, which we can say that will come in this year. Of course, apart from this, you can see that we have plenty other projects, which if we feel will fall short, we will bring that also to the market, because this is something with certainty we can say that we can launch. So we have the 42,000 crores worth of pipeline for the year. Plus we have another 10-15,000, which if we can push hard, we can launch it within this year, the end of the year.
And what
Plus,
was the business
of 20,000 crores already.
Oh, yeah. So I can see that you've spent close to about 5,680 odd crores on land and other TDRs. So what was the pure land spend in this, and what was the business development done in terms of GDV addition for FY25?
Out of the 5,500 what we have spent on the business development, close to 1,500 was on stake acquisitions. We had done a couple of stake acquisitions in Q3 and Q4, including Triple PL Acres, PGPL, and Franklin Mumbai. So that contributed close to 1,400. Apart from that, we have done acquisitions, including in Bangalore region. We had acquired phase 3 of Trinity Park. There we have spent close to 400 crores. And in the current quarter, other miscellaneous included, we have spent on Southern Star, some amount we have spent on approvals, and on Indirapuram we have made some land approval payments.
So Amit, all this put together, how much would be the land addition in terms of GDV addition? So this 1,500 crores, the stake acquisition, so how much was that in terms of value of business development?
1,500 was, we have acquired the balance stake, and most of them we have made it 100%, and in the Triple PL we have increased the stake from 60% to 74%. So
how much did that brings the value, GDV?
Additional, it would have contributed close to 20,000 odd crores.
So for 1,500, you have added 20,000 crores of GDV?
Yeah, total. Because if you see in this project, especially in a Triple PL, we have launched couple of them. Like Indirapuram itself was 11,000 crores, and apart from that, we have other projects as well. You have Falcon City, Lux in that. Okay, then we had TPC Hyderabad. Then in Nautilus we had acquired 40% stake. Okay, so these are some large acquisitions we have done.
So just as you've been cleaning the structure, so is there anything else pending to be cleaned, or now almost everything like falls into the listed entity and anything else is still pending? And if it is pending, how much would be incremental spend to acquire that?
Now, what is pending is only in triple PL, what the promoters are currently holding 24%. Okay, but I don't think so in the near future we intend to acquire that 24%. So in the current financial year, we don't foresee any further spend on further stake acquisition.
Okay. This last question to Irfan ji, sir. So now in NCR, we have already clocked 6,500 crores, which I think Zach told. So how do we see this market now incrementally in terms of growth? What are our plans for business development? And over the next 2-3 years, how do you think this market will build up, and even how Gurgaon will play out here?
No, actually, that's why we were trying to test out this market, and the market has really welcomed us. That shows there's huge amount of potential here. We are concurrently evaluating a lot of deals that have come to us, and very soon we should be able to lock in a few deals, sensible ones. Of course, we don't want to go berserk on this. And I think if things work out, we should be having some lands in NCR, some more, so that the pipeline keeps maintaining. We do have one land in a small piece of land in KG Mark, which will come out to the market very soon. But then we are looking at scale. So in that scale, we have identified a few lands, both in Noida, Gurgaon, all of these places. But once it's done, we'll keep you informed. I think it's a good market. It's a good test for us, and I believe that there's enough potential. We always knew there was potential. It's only a question of we had to break the ice there, and I think we have done it and done it in style.
Sure, sir. Thank you. Those were my questions, and wish you the best.
Thank you.
Thank you. The next question is from the line of Puneet Gulati from HSBC. Please go ahead.
Yeah, thank you so much for the opportunity and congratulations on a good start. My first question is, can you also talk a bit about the rest of the 6,500 crore that you think you will sell in 1Q? What are those projects?
No, we have ongoing projects in Bangalore, in Mumbai. We are going to launch Chennai in June. We've got the approvals and we are waiting for RERA to come, which should come in the first week of June. So if you really ask me, giving you a breakup, I think you have already done the total. It will be quite some of the existing projects plus one launch. We also did a launch in Bangalore called the Gardenia Estate, which is open and it's like open and shut. That itself gave us about 1,000 crores of revenue or 800 crores of revenue. So I believe ongoing in existing stocks, new launches in different geographies will give us that number.
Understood. That's helpful. And secondly, when I look at on a quarterly basis, the construction spend seems to have fallen a bit on a Q-on-Q basis. How should one read that? And what would be your sense for next year?
The quarterly spend last quarter was little high because we had spent a significant amount on government approvals, especially on Nautilus as well as on TPC Indrapuram. So on an average, quarterly spend only on the construction cost on the residential segment should be in the range of 1,600 to 1,800 crores per quarter.
And that is not going up because your sales momentum has gone up. So will that also go up?
No, right now it covers all the ongoing projects. Incrementally, whatever we bring, that maybe slightly will go up. But then whatever we launch in the financial year 26, the major construction spend will happen in 27. So it won't significantly add in 26.
Understood. That is clear. The second question is on your the cash flow profile that you share, which is the free cash flow from residential project, 19,740 crores and 24,000 crores. If I look at the disclosures for Q3, the number seems to have been gone down recently. What should one attribute that to?
Basically, if I'm not wrong, last time it was 48. Now it is close to 44, 45. Now, That is basically because of we had couple of launches. Okay, so there has been a shift from the upcoming to ongoing. So if you see the breakup, the upcoming has come down and the ongoing cash flows have gone up. Okay, but on overall basis also we have done collections during the quarter. And again, most of the projects in the upcoming category are on the design phase. So we will keep revising the construction cost estimate as and when the designs are getting finalized. So it will vary maybe by 3-4% once the designs are finalized.
Because cumulatively it is down 5,500 crores. So just trying to understand, is that just cost changes or is there
No.
some other
Basically, collections also has happened. We have collected during the quarter around 3,000 to 3,500. That collection has reduced. Apart from that,
this is net number, right? So collections minus construction spend, which is still a lower number, 1,000 odd crores from quarter perspective.
That's what I'm saying. It's a combination of collections plus revision in our estimates for our upcoming projects. It's a combination of both.
Okay,
And
so
area also. And areas also. Areas also, because we would have allocated something for the residential portion. Maybe during the design phase, if we decide, okay, we have to include a portion of retail and all that. So those changes happen and that impacts the cash flow profile.
Okay, got it. Lastly, Amit also alluded that there is still some stake of promoters, 24% triple PL. How do you take this call of what remains with promoters and what eventually gets bought by the company? What is the deciding criteria? If you can give some color, it will be very helpful.
See, again, last year after the QIP, I think so during the roadshows, some of the investors have suggested that to keep the entire, I would say, the structure clean and whatever is held by the promoters, we should acquire it. In that process, we have done that acquisitions post the QIP and acquired the promoters stake in most of the entities. And as I mentioned earlier, we have already spent close to 1,200 to 1,300 only on the promoter stake. Now, acquiring the balance 24% also will require significant sum of outflows, which will put pressure on our cash flows and impact even our debt profile. So, considering the cash outflow impact on the stake acquisitions, I don't think so in the current year we are planning any further acquisitions.
And would you be able to give any estimated value of this number that you would have to spend if you were to acquire?
See, for acquiring 16%, we had paid close to 500. Okay, post that, some of the projects have already launched in that entity in triple PL. So if you see, Spring Heights has got launched, okay, and similarly, Indrapuram has got launched. So if you take benchmark of 500, it will be Nautilus is another project. So these projects have got launched. So what discount factor we had given for unlaunched, that no longer applies. Okay, so the valuation, if we take 500 as a basis, today the 24% will be valued at 800. Removing the discount factor, it will be higher. I don't think so I will be able to comment what will be that number, but it will be upwards of 800 crores.
Understood. And lastly, on the market side, if you can comment on the pricing environment that you're seeing and the competitive intensity on business development. That's all from my side. Thank you and all the best. Yeah.
We believe that the pricing environment is good. Though prices have gone up, absorption has been very, very strong, be it in Bangalore, Mumbai, Hyderabad, or in fact, Indrapuram. Now that we've launched, we can comment on that. And at the same time, we have a very balanced approach at looking at new acquisitions, where we believe that the project should fund itself. So we are not very aggressive in the way we price our acquisitions. So over there, we look at an EBITDA margin of 30 to 35%. And based on this, we look at acquiring these assets. So
even though realizations have gone up on the customer side, we are conservative when we look at new acquisitions.
Okay, that's great. So thank you so much and all the best.
Yes, sir.
Thank you. The next question is from the line of Yash Gupta from Astic Koteja Family Office. Please go ahead.
Good afternoon, everyone. Sir, in slide number 24, GDV of the project that expected to complete in FY26 is around 17,000 odd crores. Is it fair to assume that we will book this revenue of 17,000 crores in FY26 with a EBITDA margin of 30-35%?
It will depend on at what point in which quarter it gets completed. So the revenue recognition happens on two fronts. One, the project should have got completed, and second, the handover should have happened. Okay, so 17,000 may be the GDV, but handovers also we have to factor. So, for example, if a project is getting completed in Q4, we may not have enough time to complete the handover. So 17,000, maybe we can apply a percentage, maybe 70 to 80% of that we should be able to hand over.
And anything on EBITDA margin?
EBITDA margin will be in that range, yes. It will be in the range of 25 to 30%.
Okay. Sir, second question on Hyderabad market. How the Hyderabad market is moving for us? We have a good inventory of 5,200 crores there, and we don't have any major launch in Hyderabad in FY26.
Sir, for Hyderabad, we do have some projects which are upcoming and under planning. That is Prestige Rockcliffe and Prestige Imperial Park. This we'll try to bring in this financial year.
Plus, we also
Acquiring
land for plotted development. And we've also tied up a deal for about 9 million square feet of residential, which is again a great location. So all this is work in progress, but these two are the major launches that are going to come.
Okay, sir. Sir, any thoughts on completion of Aerocity and the launch of Jijamata in Mumbai? Is there any delay into project?
No, there's no delay at all. In fact, Aerocity is on track. In fact, the office component of 600,000 is already committed and leased off. The hotel, obviously, it will be ready by this year end or early next year, but then it takes about 4 to 5 months of simulation. So we are planning to see that it starts trading in the month of July next year. But the office itself per se, we will do the handover by the end of the year.
And anything on Jijamata, Mumbai?
Yeah, Jijamata is also, it's all the planning is getting done aggressively. Now we've named the project the Prestige Place. Created a new brand identity called the Prestige Place. It's a mixed-use development. It has hotels, it has office, it has branded residences, shopping center, and residences for sale. We've appointed SOM as the architect, and they're on the job. We've already paid some premiums for securing the FAR and other things. And it's work in progress. It will certainly hit the market soon. But the question is how soon is to be evaluated. We don't want to hurry this up. We want to do it well. We want the planning to come out really, really well. And we are planning to, the hotel brand we are planning to do is a Waldorf Astoria with all Waldorf Astoria branded residences.
Okay, sir. Sir, just last question on the Mahalakshmi Tower. We have completed this tower and recently you have also announced it. So how is the demand going on and what rate we are leasing?
No, that tower is not for sale. That's actually that Mahalakshmi, that's called the Prestige Turf Tower. It's only to rehabilitate the turf estate tenants who are there in the property, and they will move. Evergreen also will move there. I think between the two of them, they're going into this building, and the company may not have anything left over as such, unless we bought a few units here and there. But then the whole thing is to rehabilitate them so we can complete the most iconic development for the Mumbai city, which is the Prestige.
Okay, sure. Thank you, sir.
Thank you. The next question is from the line of Parvez Qazi from Nuvama Group. Please go ahead.
Hi. Good afternoon, and thanks for taking my question. So I wanted to get your views on the approval side. In FY25 approval were an issue for the industry, but now with our launches picking up, we see that approval situation has now stabilized. And wanted to get a status on some of our major projects which are planned for launch in FY26, like Raintree Park, Falcon City, Noida, Pallavapuram, etc. Thank you.
Thanks, Parvez. Yes, I think we've got a grip on our approvals, and they have started falling in place. What we have said earlier also when we give the launches planned and the GDV slide, most of these projects are in the final or penultimate stage of their approval. And since we operate in various geographies, the nuances are slightly different, and each project will have its own nuances. But having said that, we're very confident that we'll pull this off. Evergreen at Prestige Raintree Park and Falcon City Lux, they should also happen in the next 2 or 3 quarters.
Sure. And Pallavapuram, Chennai?
Will happen this quarter. Chennai will happen this quarter.
Sure. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Kunal Lakhan from TLSA. Please go ahead.
Hi team. Firstly, on the launch, on the sales guidance, right? If we are guiding for 12,000 to 13,000 crores of sales in Q1 itself, and considering incremental 40,000 crores of launches, excluding Pallava Gardens, just trying to understand, because if you look at last year, right? Whatever you have launched, you have sold like 50-55% of the launched inventory. So how should we look at if you're able to get these 40,000 crore worth of GDV launched? How should we look at this guidance of 27,000 crores since you'll already be clocking 12 to 13,000 crores in Q1 itself?
No, this time you want to be conservative. We've got also 20,000 crores worth of inventory. So, but the thing is, I'd rather under-promise and over-deliver.
Sure. Okay. Also, in terms of, sorry, I don't know whether I missed this number, but in terms of our new acquisition target for this year in terms of land spend as well as GDV that we plan to acquire for 27, any targets we have set?
Our land spend on business development should be in the range of 4,000 to 4,500 crores, which should translate into a GDV of close to 30 to 40,000 crores.
Understood. And also, lastly, on Southern Star, we had reported numbers in the March quarter. We had launched that in the last week of March. Any incremental data you can share in terms of how the sales have panned out in that project in April and May?
Yeah, it's a work in progress. It's done very well. And I think when we come to June numbers, we'll be pretty happy because, again, it's normally like you yourself said, we sell 60% to 70% of the inventory in the launch itself. So that's going to happen.
Sure, great. Thanks so much and all the very best.
Thank you. The next question is from the line of Pritesh Sheth from Axis Capital. Please go ahead.
Thanks for the opportunity. First is on collections, which was flat this year. And I can see while, pre-sales scaled up for us in Q4, it didn't result in too much pickup in terms of collections. So how do you see this collections growing next year?
Pritesh, despite, if you see, last year we did 21,000 crores of sales and did a collection of close to 13,000. This year it was flat despite our sales falling to 17,000. In Q4, again the collections, though the sales numbers were higher, the collections remained flat because you see most of the project got launched in the fag end of March. So two of the projects, your Southern Star as well as the Spring Heights, got launched just 2 days and 7 days before March 31st. So those collection numbers didn't flow in the financials in FY25, but then all those numbers should flow in FY26. So you will see a healthy pickup in collections during FY26.
Sure. So just to clarify, we didn't collect anything apart from the usual booking in Southern Star and Spring Heights, right?
Sorry, I missed.
No, we did collect more than the nominal amount that you're talking about. But given that it happened at the fag end of the quarter, it'll all reflect in the Q1 of this year with respect to those projects, and those collections remain very healthy as per our normal benchmarks.
Sure.
And
sure.
what Amit was saying was, since a lot of completions will come in this financial year, you should see amount of collections coming in this financial year.
Perfect. That's helpful. And just last on Noida, any breakthrough expected this year for launch of Bougainvillea Gardens?
That's a government issue, sir. I don't know when, because we are also now very tired, jaded, so we are looking for other lands. We got completely sort of setback because we were depending on that for a long time, and thankfully we could do this in Indrapuram. So we are looking for new land, and whenever the Noida happens, we'll take it as it comes. Because right now it's an issue not only for us, it's a global issue for everybody.
Sure. So in NCR now will contribute us equal to what we are doing in Bangalore, right? So it's a very large market for us now, and we don't have a mass market product there right now. So any big acquisitions expected either in Ghaziabad or any other tier 2 markets within NCR or Gurgaon, Noida can drive that much sales going out for us?
Yeah, it's all work in progress. I think by the end of this quarter, next quarter, we'll discuss it. Right now, it's all work in progress. The moment we tie it up, automatically we'll come to know.
Sure. Perfect. That's it from my side, and all the best. Thank you.
Thank you. The next question is from the line of Akash Gupta from Nomura. Please go ahead.
Hi, am I audible?
Yes, absolutely.
Hi, sir. Congratulations on a decent quarter. Sir, my question with respect to your FY26 pre-sales growth guidance, pre-sales number at 250 to 270 billion. Just wanted to understand, is there any downside risk to this number from a demand perspective or approvals not coming in perspective? Like, how confident are we on this number?
So there's always a risk associated with this business, especially in our business. But I think we're confident that things are looking on positive side. And we remain positive that we'll be able to achieve this guidance, given that we have a lot of GDV coming in our 2020 launches that we are about for the year.
And sir, like, are you seeing any red flags with respect to the demand in the sense any changes in footfalls or conversions, anything like that?
Absolutely not. Absolutely not.
If the product is good, I think it will keep doing it. For me, if the product is wrong, there's stress. As long as the product is to the right target audience, I believe this will be business as usual.
Understood, sir. Great. Thank you so much, sir.
Thank you. The next question is from the line of Puneet Gulati from HSBC. Please go ahead.
Yeah, thanks for the opportunity again. If you can also give some color on how do you intend to lease both the Prestige and BKC projects? Have you leased some part already, or do you intend to lease it closer to completion only?
No, the teams are working very hard on this. I'm happy to say leasing, pre-leasing is happening, but at the moment I can't either tell you the quantum or the company because we've signed a lot of confidentiality with them. But it's very, very, very positive, and that's why we are quite bullish on both these properties.
Okay. And when should we see both of them?
Construction is also going on at full speed. So even completion also we can start looking at it in the year 28 for BKC and year 29 for the Prestige.
28, when you say it's calendar 28 or fiscal 28?
Yeah, it's fiscal 28 for BKC for sure, and maybe calendar 29 for the Prestige because it's high.
Understood. That's very, very good. That's all from my side. Thank you so much.
Thank you. The next question is from the line of Biplav Debarma from Antique Stock Broking. Please go ahead.
Good afternoon, sir. My first question is on the status of Jijamata Nagar project. So is the SRA work done and entire project cleaned up? I mean, what is the status of the project? All SRA related work done?
So bulk of it has been done. We've already started constructing the transit camps, everything over there. And I think there's a small, 20% odd left to clear up over there, which is in process and will happen.
So 20% around?
Yeah, around that much.
Okay. So 20% more to be cleaned up. After that, and the rest of that?
10%. About 10%.
Okay. So that would be 5-6 months, sir, for that site to be cleaned up?
Earlier than 5-6 months.
Okay, sir. Now, my second question is on the CapEx project, your BKC and Mahalakshmi and Delhi Aerocity. How much more CapEx to be incurred, including approval, construction cost, and all the other costs in these three projects?
Just give me a moment. I'll take up those numbers. Yeah, the total capex spend on all these three projects will be in the range of 7,000 to 8,000 crores.
Okay. And my final question is, we recently did the site visit of the three projects in MMR that you have delivered, the Rehab Tower in Mahalakshmi, Jasdan, and the CSI in Mulund. The delivery timeline seems to be like 3.5 years, if I'm not mistaken. For Mumbai, many of us have seen, time taking for delivery 5 years, 6 years, whereas you have delivered 3.5 years. Is it the norm? Would it be the norm like you would be delivering 3.5, 4 years, or this is just these three projects are just an outlier?
So it generally takes about 4 years, so 48 months to do any real estate project. But depending on the nature of the project and scale, sometimes it could go up by a year or two over there. Because what happens is if there's a height, if there's a lot of basement, high rise, substructure work, and if it's like maybe 100 acres inside or whatever, it could take some time based on the scale, and all of this is factored in. We generally take the amount of time it technically takes to do the work. Sometimes we even deliver faster. That is the USP of Prestige.
And of course,
that's really commendable.
So things will happen. We're making things happen.
That's really commendable, and all the best for FY26, sir.
Thank you.
Thank you, sir.
Thank you. The next question is from the line of Kunal Lakhan from TLSA. Please go ahead.
Yeah, hi. Thanks again. Just on the recent acquisition of the project or the 50% stake in that project with Velar Estate. So we paid 500 crores for 50% stake. If you can give us a broader economics of how much incremental cost will be incurred in terms of FSI premiums and construction cost, and how much will be our stake?
Yeah, I see this whole project will be 1.5 million square feet of office. It's already been designed. And very soon we can lock it in for approval. Obviously, we have to get through the whole gamut of things. So our contribution, company's contribution to get 50% equity in that company is in that SPV is 504 crores. Then the rest of it will be contribution of equity from both the partners or debt. So that decision will take as we go along. And this money is not something that the company has to invest upfront today. We'll have to invest it over the life of the project. And So only when that 504 crores gets exhausted, do I have to, contribute together or and get into debt as far as we are concerned. I think the rest of it will come in the form of debt. And if you're asking me what is the cost of the overall project, the numbers are not readily on hand with me, but I think Amit can share it with you later.
Sure. And in terms of timelines, when do you expect this to be ready and completed?
Yeah, I think, again, it's like Red said, it's 4 basements, so it's, excavation can start almost immediately. And it's not a high-rise building, it's only 11 floors. We should be able to finish this in 3 to 3.5 years because we want to go it on a fast track.
Sure. And just clarifying, the 500 crores that we paid stays in the company. It was not a cash out by the earlier.
No. Nothing is a cash out. Yes, having said that, there is a small component with the other partner do a small takeout, but then they have to bring it back in. And that's only to make that SPV debt free. There's some 50-60 crores debt there is, so which we are now paying it now, and then that will come back to top up to that 504 crores. There's no takeout from either party.
Understood. Thank you so much.
Thank you. The next question is from the line of Yash Gupta from Astic Koteja Family Office. Please go ahead.
Sir, my question is on commercial side. If you look at the exit rental of the commercial business, we have taken BKC and Mahalakshmi at around 375 rupees per square feet. But current rates are very much higher than what we are expecting. So, do we need to take any uptick in the FY-2028-29 exit rental?
We'll take it as we go along. I think that itself is a great number. If then as we get a better rent, it's great. But as of today, we believe it's a fair number to work with. And sometimes if you do some pre-leasing, that's how. And this is we are talking on not on carpet. We are talking on super built area. The 350, 375 is a super built area, not on carpet. Carpet will be 500 plus.
Okay, sir. And sir, next question on this Mumbai Prestige Horizon Heights. This is the Mira Road project that we have taken last quarter.
Yeah.
And this will be launched in FY26 only.
Yes, we are trying hard to bring it. It was to come earlier. There again, unfortunately, the MOEF committee has been disbanded in Maharashtra. So the moment the environment committee comes in and we get the clearance, it's a matter of time to get the approval and launch it. So we are also waiting very impatiently for that to happen.
Thank you. Sir, the last thing on the dividend policy, this time we have paid 1.8 rupees as a dividend. So is this dividend will be the continuing one or it will be like a one-off special dividend?
No. The last year also we did that same 1.8 rupees. So this year also the board felt, because in the previous year it was 1.5 rupees and this year it's 1.8. And of course, if the company does have additional cash flow, it depends on the board. Maybe later on they may treat it as interim and they do more. That depends on how generous the board is.
This question was main pertaining to because next year we will going to expect like a big completion in terms of residential, and we are looking for 13,000-14,000 crores of booking revenue in residential. That was.
No. The thing is, if there is surplus cash flow, see, always it's a balance. If too much of dividend is paid out, we don't want it to happen that again we have to look for funding and cash flow. So the best is to be conservative, and if things have to happen, if there's a lot more cash flow available in the company, we will definitely declare more.
Thank you. The next question is from the line of Abhishek Lodhiya from Motilal Oswal Financial Services. Please go ahead.
Good afternoon, sir. Just want to have one question. For retail capex, right? Balance spend has increased by roughly 1,100 crores. So what is it attributed to?
So this is, if you see the breakup, mainly attributable to the upcoming projects, where we were just based on the design specification, we looked at the cost. So it is mainly attributable to upcoming projects.
Okay. Thank you. Thanks.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for closing comments.
Thank you so much, everybody, for the insightful questions. You had lovely conversation, and we do hope you understood what the company is up to. More than feel free to ask any questions offline. Zaid and Kizra and Amit are more than happy to answer. And it's wonderful interacting with you as always. Zaid, you want to add up?
Thank you so much, everybody. We remain focused and driven to improve our results year on year, and we remain committed to delivering shareholder value.
Thank you very much. On behalf of Axis Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect.